Hi everyone, and welcome to a joint SEAM, Centre for Energy and Environmental Markets, and SPREE seminar. We don't normally have them on a Friday afternoon. Great you could come along. I think I know most of you, if not all, but I'm Ian MacGill. I'm one of two directors of the Centre for Energy and Environmental Markets, and I should just flag the Research Coordinator Engineering is Anna Bruce, who's just over there. I don't think Ziv's here today. No, okay. So look, Dylan's up here for some projects that we've been working on. You may well know Dylan's work if you read Renewable Economy, if you see Dylan's little widget, OpenNEM on Dispatch. Dylan's down at the University of Melbourne in the Melbourne Energy Institute. A couple of homes there these days, isn't there? Mm-hmm. More the
Climate Energy College. Yeah.
More the Climate Energy College, which is a sort of German-Australian collaboration. He's just submitted his PhD, I believe.
Sort of, yes.
Sort of, yeah. Close enough.
Close enough.
But he's been very busy, as you'll know if you've been following the debates, and he's offered to speak today on a topic which is incredibly important, incredibly politicised and incredibly complex, and that is the National Energy Guarantee, or is it the Nationals Energy Guarantee, or who knows what it is. But he's volunteered to take that topic on and guide us through the maze. If you have been following the news, of course, it keeps getting kicked down the road, but we're running out of roads, so we really need to get a sense of what might come next. So please join me in welcoming Dylan.
Thanks. Okay, great. Thanks, Ian, and thanks for inviting me along. I would have to say that was fairly creative use of the word volunteer. Last week I was coming up here for this to hang out with some of you lot, and Navid was, you should do a seminar on the NEG. So thank you, Navid. And yes, it's a very dynamic space, and indeed I was busily updating my slides this morning on the bus on the way into university, to the point that I actually didn't realise I was on the wrong bus and ended up at Bondi Junction. Anyway, yes, so I'm going to talk about the NEG to some extent. I'm also going to talk about some other sort of context to what's happening and the debate at the sort of national scale. And what the implications are, or what, just some preliminary thoughts about what the implications of some of these interventions are and these developments are, because they do actually sort of strike at the foundation of how our energy system works, or how it has worked in the past and how it might work in the future. I guess sort of really, thinking about the long-term implications of some of these developments. And yeah, as I think you'll all be aware, this is a fairly dynamic space, so it changes fairly frequently, and I'm not entirely sure I agree with everything I might say today. They're just things that I guess cross my mind. So I guess the first, just as an outline, I'll talk through some of the political context and the interventions and recommendations, and indeed some of the interventions from AEMO over the last couple of years. And basically this is all really roughly since the Black System event in South Australia about 2 years ago, which I think was actually a stroke of good luck for my career, or my my area of research. It just so happened that I wrote a sort of paper or a report on the South Australian electricity market about a month before the System Black actually happened, which put me in a fairly good position, just by good luck rather than good management, to sort of look at a lot of these sort of these things. And then we'll have a look at, have a bit of a talk through the NEG, and what some of the good, bad, and ugly bits of that are, and then the sort of implications around this. And if I get time, I might talk about my my pet project, OpenNEM, which I think some of you might be familiar with. So yeah, as mentioned, there was obviously the big South Australian System Black event that sort of made headlines all over the world, and was deeply politicised from moments into the event. In fact, we had Barnaby Joyce on national TV while the entirety of South Australia was still in blackout, which I always think is quite a funny sort of phenomenon when we think about, at the moment we have the bushfires down in south coast of New South Wales. We have the drought in southwestern New South Wales, which is actually where I'm from. Occasionally we have storm surges up in across the coast, or cyclones, and we can't politicise those. Whenever these events happen, these are off bounds for political gain. But within minutes of the South Australian system blackout, we had a lot of Conservative MPs on television, basically blaming wind, blaming renewables, and basically pushing South Australia to basically come up with their own plan to deal with the problem that was created federally. They were basically pushed into a position to have a jurisdictional response to what happened in South Australia. They probably didn't want to do a lot of the things that they ended up announcing, or were not planning to do a lot of these things. They were looking at doing a particular reliability, a sort of style of capacity market that they were trying to, they'd done some consultation around, which eventually went out the window. But all of these were basically knee-jerk reactions, well, to some extent knee-jerk reactions or political reactions to the pressure that was put on them from basically federal politics. And some of them you'll be familiar with. There's the Hornsdale Power Reserve, or the Tesla mega battery, as everyone likes to refer to it, and the temporary state-owned generators, which I've put there in inverted marks because they are very much not going to be temporary. And this is a fairly significant, from my perspective, a significant change that occurred. Was basically the state building another power station in an area that had actually been had gone a long way down the privatisation, liberalisation, deregulation kind of pathway. South Australia was not that far behind Victoria in this space, and for them to actually basically build a gas, or a series of gas-fired power stations was at the time, I thought, a fairly significant development. But it turns out they were closely followed, which I'll get to in a minute, by the federal government. The other sort of political interventions that these are a little bit different to the South Australian case, because they weren't sort of reactionary. But we have the Victorian Renewable Energy Target, the Queensland Renewable Energy Target, and the ACT Reverse Auction Scheme, which you're all probably familiar with. Now, I guess, these are not sort of the traditional market-led kind of or market-led approaches to building new capacity, and it's quite a different approach to how generation capacity expansion has previously been sort of expected to occur, driven by the market, etc. And I think it's quite, this is probably 2.5 years ago or 18 months ago, when they were doing consultation around the Victorian Renewable Energy Target. I can remember, they were talking about this body that would administer the Renewable Energy Target, and they could potentially be, they'd be underwriting power stations. They could be actually generating money from the because the electricity prices were so high, and because they were taking the long-term risk, they could actually be basically earning money, or they could be paying out, and they were trying to come up with a name for what they should call this new institution that would be managing this. And some smart ass in the audience said, "Oh, why don't we just call it the State Electricity Commission of Victoria?" And it's, sort of somewhat simultaneously or at the same time, we've got an active discussion about having a state-owned retailer. Now, which is, thinking about how a gentailer operates, it's sort of the natural hedge, or the natural body to be the counterparty. You've got, risk management for the contracts for difference for the reverse auctions, and you've got risk management for a retail arm, and you're effectively creating, a state-owned gentailer, or arguably a state-owned electricity commission. I don't know. Of course, then it became even. This is following the South Australian intervention, and this was sort of a case of I'm a bit better than you, or my appendage is bigger than your appendage. This was effectively when this happened. I thought this, the intervention of South Australia building state-owned generators and building, the Tesla battery. That's one thing. But when the federal government said they were going to build Snowy 2.0, I thought, okay, this has gone mainstream. This is not a new. This is not just a sort of one-off kind of idea. And we've also got the Tasmanian battery of the nation as well. I think it's something that's not well appreciated about, particularly Snowy 2.0, is that now that the Commonwealth government does actually own Snowy in entirety, it's basically the fourth largest gentailer. The Commonwealth government is the fourth largest gentailer. They actually have Snowy doesn't have. They don't produce a huge amount of energy. I think it's something in the vicinity of probably less than 10 terawatt hours a year. But they sell a lot of caps, a lot of capacity, and they actually have a huge retail book sitting behind them. They have two retail companies. I think it's Red Energy or Simply Energy. I can't remember. Maybe it's Lumo and Red. But they've got two retail arms, and they are now basically the Commonwealth government. By virtue of owning Snowy, is actually the fourth largest retailer in the country, which is funny when they're talking about the NEG, the National Energy Guarantee, and doing all of these new policy developments in the wholesale electricity market space. Like, that's a clear conflict of interest. And then overnight, they're talking about introducing price controls in the retail electricity space when they are a retailer. So we've got this sort of quite bizarre conflict of interest there. Now, this one's a little bit different, but this is also a recent sort of recommendation from the ACCC report that came out maybe a month ago now. This so-called Recommendation 4. Just say that because it was referred to by Tony Abbott, I think on Tuesday, in his response to the Coalition's party room on the NEG. He specifically referred to Recommendation 4. This is the recommendation that's been, I guess, loosely interpreted by the conservative elements of the Liberal Party to mean, let's go and build a new coal-fired power station. And this is actually, what the recommendation is. And this is actually, I find this an interesting recommendation to come from the ACCC in particular. It is recommending. It's basically trying to, I guess, address a particular market failure that is actually quite similar to the one that the VRET and the QRET and the ACT auction scheme is trying to address. And that's basically this mismatch that exists between a new project, a new renewable project, actually a new any power project needing to have a 10, 15-year power purchase agreement, and a retail book or a consumer, a customer, that is only able to contract out 3 or 5 years. And this is sort of I guess this is the ACCC's version of how you basically underwrite that long-term risk. Now this is a bit different to the QRET, VRET, and so on, because it is partly market-led. The projects that they underwrite still do have to have customers committed to load, and that they can't. But I guess this is more in the competition space. It can't be a gentailer, and it has to be sort of a particular scale. So it's we're not talking about small generators, but it's a very different approach to say leaving it to the market to decide letting them figure out what long-term projects are needed. It's basically it's a different form of government underwriting generation asset. It actually doesn't say anything about coal. I think that's fairly clear. It specifically refers to firm generation. and Rod Sims has been out there sort of very loudly saying this is not about coal, and you know, even at those prices that they say it doesn't make sense for it to be able to finance coal, but it's being essentially used as some kind of, I think, sweetener to for the NEG to be supported more broadly within the as something that's outside of the NEG, sort of a trade-off that's being used to sell the NEG, even though it's probably not going to sell. It's not going to be able to build a coal-fired power station. That's I guess all by the by, and this is one of the points that I'm a little bit unsure of, but it's an observation at least, that all of these things that we've seen happening, whether it's the Victorian Renewable Energy Target, whether it's the Snowy 2.0, whether it's you know, ACCC underwriting generation investment decisions, this is a very different environment to the last 20 years of, you know, it appears to be a different environment. There are some caveats I would say about this, which I'll get to at the end. But yeah, it's sort of a very different way about how we're thinking about what should go in, and to some extent, it's a little bit reflected in the AEMO's thinking in the latest ISP report as well. Talking about AEMO, the next thing I want to talk about was the RERT. Now, for those that don't know, the RERT is it's a bit of a it sort of didn't used to really be a thing. No one really knew about it. It was a fairly obscure procedure or mechanism that existed as an emergency measure to to basically be the last resort, or the last reserve at AEMO's dispatch in the case of an emergency. Now, historically, I think it's been used, or until last summer, I think it's been used maybe 3 times, like since the start of the NEM, and it got used, I think, maybe 6 or 7 times over just the last summer. Now, so just in the way of explanation of what this mechanism, what the idea is here. So as we get, if we're in a peak demand situation or a low reserve condition, AEMO, there's a series of stages that the system operator will announce the lack of reserve levels. Basically, there's 3 levels. There's a lack of reserve level 1, lack of reserve level 2, and lack of reserve level 3. Now, the idea is you don't get to lack of reserve level 3. That is basically when there is not enough generation to operate the power system securely. They can operate at that period of time for less than 30 minutes. Turns out they haven't been doing that recently. Or they can do load shedding, and then before that is lack of reserve level 2. So if you're at lack of reserve level 2, that means if something goes wrong, you're gonna be up the creek. And then lack of reserve level 1, it means if something goes wrong, it's sort of like N-2 contingency. So if something goes wrong if one thing goes wrong when you're in wall 1, lack of reserve level 1, you go to lack of reserve level 2, everything's sort of okay. But if 2 things go wrong when you're in lack of reserve level 1, then you're in trouble. Now, the idea is that these RERT mechanisms, these emergency reserves that AEMO can go to the market and procure if they think they're going to be in this particular situation, only occur when they're at lack of reserve level 2 or above. Now, so yeah, historically they were kind of, I guess, they were never intended to be used a lot. They were just there as an ultimate backstop, and leading up to summer or leading up to a period where they thought there would be a lack of reserve, they would basically go out and say, is there anyone out? Go out for tender and say, is there anyone out there that might be able to help us out if we get in trouble? Now, so this was used a fair bit over summer. The RERT payments came to $52 million. Which in the context of the market it's not huge. I think last year's turnover was about $17 billion. So, I mean, it's still a big number. It's still paid for by someone. But it becomes particularly interesting when you look at how much it cost for the actual energy that was delivered in this particular case, or the energy that was withdrawn from the market in this particular case. It was incredibly expensive from one perspective, and certainly there's been some elements, namely the Australian Energy Council and a few other sort of generator lobby groups that are saying, look, this is really expensive, don't do this. Now, there's a flip side to this, because when a lot of these happened, the market wasn't actually at value of lost load, $14,200 a megawatt hour. This is the market price cap, and so at half an hour at vol, on those particular days in Victoria, the example I had up before where it cost $27 million, half an hour at vol at that particular time would have cost $62 million. It's not actually clear how long they activated the RERT for, or how many, so it's not a clear-cut case of working out if customers were better off. But there's the question that I'm really interested in is, why wasn't it at vol? Because the price was not at $14,200, which is the price. The whole point of having this high price cap is to incentivise new capacity to enter the market. So basically, this is the point in time that a new generator would, or a peaking generator would be recovering its cost of capital, and by implementing this, there was actually generation that was not dispatched at sort of that high price. I think the price may have peaked at $10,000 for one half an hour interval, but it was much below that for the rest of the day. So, from a generator's perspective, this is not a very good outcome. You've basically lost your incentive. You've lost your recovery of your capital. So this effectively, sort of overuse of, or arguably overuse of RERT, basically results in a net wealth transfer from generators to consumers, which is great for consumers in the short term. But in the long term, it actually undermines the whole point of having an energy-only market, or the whole, incentive structure that's supposed to be set up by having an energy-only market. If you're there was actually another RERT activation in, I think, November last year in Victoria, where the price didn't even get above $300 a megawatt hour. Now, if you're a gas generator and there was a gas generator in Western Victoria that was not dispatched, and they had a marginal cost above $300, presumably that's why they weren't dispatched. But they were, from anecdotally speaking with them, they were incredibly pissed off that the market operator basically took them out of the market and dispatched a RERT. Now, it's basically undermining the whole the energy only market design. It's like, this is one way we could go about basically killing an energy only market, by removing the incentives that it's supposed to be providing. Now, I'm not trying to say this is a good or bad thing. It's kind of a good thing for consumers, but it's a thing. Like, in terms of how this impacts investment decisions, or even just regular operation of a particular power plant. If you're all of a sudden you're competing with the market operator, and they have a much bigger, they've got much more information or they've got much more information than you do, and they can draw on more resources than you can. Another thing that's sort of, I sort of mentioned this before. There was the AEMC just recently put out a report, or maybe it's a couple of months ago now, about reliability and reliability in the NEM. And in the last 12 months, on 11 different occasions, AEMO was running the power system for longer than 30 minutes at an insecure operating state. Now, this technically they're breaking the rules in terms of what the national electricity rules say AEMO is allowed to do. They're supposed to bring it back within to a secure operating state within 30 minutes. And this is, I guess, this is an interesting development. It's sort of like, I mean, the risk basically the risk is that there's basically a widespread blackout if something goes wrong when you're in this particular state. So the sort of political calculus, or the behind this, I guess I'm completely guessing here, but basically the cost trade-off is having load shedding versus having a widespread blackout. Now that's a sort of an interesting risk-taking perspective, or an interesting position for AEMO to take as in terms of managing this particular risk. Again, nothing went wrong. Maybe they have more information than what we have about what was actually going on behind the scenes, and everything was fine. But from an objective perspective, that's a pretty concerning kind of way to operate the power system. And then the other thing that some of you are probably aware of is around the interventions that are occurring in South Australia on a very regular basis, basically to maintain system strength when it's very windy, or minimum synchronous generation. Now, again, they're not a bad thing, but it is a sign of a market that is not necessarily providing the right incentives or the right signals for people to be doing what they should be doing to keep the system secure and reliable. Okay, now I'm going to start talk a little bit about the NEG, which is it's been taking up a lot of my time lately. I guess I'll start off with the good. I think I said the good, the bad, and the ugly earlier on, and I actually can't think much that's actually good about it. I think this quote from Alan Kohler about a week ago, I think perfectly sums up the NEG in terms of what its perceived good is basically to end the climate wars, so to speak. A phrase that annoys the hell out of me because it's just not true. Whatever comes out of this, the climate wars aren't going away anytime soon. I think the climate wars will end when we've got zero emissions, and I don't think that's happening anytime soon. But yeah, in terms of the mechanisms, and I guess I'll talk a bit about, what I was planning on talking about is things like about the modelling and and some of the processes that have gone on, which are pretty horrendous. But in terms of the mechanism, the basic idea is quite a the basic idea is to, or as we're expected to believe, it's an emissions trading scheme that isn't called an emissions trading scheme, but it's a very poorly implemented one. It's a very opaque one. You can't see a price signal. There's market concentration issues. There's all of these other issues, and the same thing on the reliability obligation side. It's theoretically we don't have a reliability problem if you believe the AEMC. Now we've got they set the reliability standards. They did a report, I think it was just before the ESB put out their first draft, and they said, oh yeah, reliability standards are fine, they're doing their job perfectly, which seems like a very bizarre thing. Well, it's a very bizarre thing for the AEMC to say, the AEMC's reliability panel to say, the settings are fine, everything's working fine, and then the next day the ESB, which the chairman of the AEMC is on, says, we need a reliability obligation because otherwise the light's going to go out. That's sort of one of the one of many internal inconsistencies. But yeah, it's actually a fairly significant change, a very significant change actually to the way we think about reliability or how we address reliability. Now, as some of you will know, the Australian Energy Market Operator puts out the National Transmission Development Plan, or did put out the NTNDP every year. The ESU, the Electricity Statement of Opportunities. Now that was sort of, the intention of that is basically guidance to the market to show when there is expected unserved energy, where a good investment might be made in a particular generation. It's just sort of an information exercise. Okay, this is what we think is going to happen. This is where there might be a good opportunity to invest in new infrastructure in the year. Now, one of the big changes, I think, is that this document is basically going to become a regulatory instrument. It's going to basically form the background of basically a compliance for generators to for retailers to meet their reliability obligation. Now, this is a fundamental sort of shift in my mind from a market operation and planning perspective to basically a compliance role, or producing something that has a compliance function at least. It's particularly, I think there's a lot of conflict of interests here, because you have the Australian Energy Market Operator is owned by generators and is also owned by state governments that are all fairly reluctant, or their incentives are to basically not have blackouts and not worry about the costs in the near term, because the political realities of blackouts. So there's sort of a mismatch of incentives around this. The market operator actually having a role in enforcing reliability. And similarly, the Australian Energy Market Operator also has a very strong incentive to not have any reliability problems as well. Reflects pretty poorly on them if there is. So I think having them in charge of this is just, I guess, from a governance perspective, having them in charge of reliability is a funny choice from my perspective, at least. Now, in terms of some of the bad, they were the good things I was talking about. So, there's been some modelling in inverted marks done by Asa Allen around this, and it's probably the worst modelling I've ever seen in my 8 years working in this space. It is absolutely atrocious. It makes no sense. There's just so many things in it that are just completely illogical, or the best example I can think of is, or a simple example I can think of it is demand response. So they've assumed demand response in their modelling of the NEG, which, that's a fair thing to do. If you look at what they've actually modelled, it's got nothing to do with demand response. It looks effectively like energy efficiency. There's a big chunk, it's about 300 megawatts reduction in load that's consistent across the entire, the entire period that they're modelling. Like that is not demand response by any stretch of the imagination. I mean, you can call it demand response if you want, but it's just not demand response. And quite funnily, they say that it's they're basing it off AEMO's ISP work, which I've been looking at quite closely, and it's not from AEMO's ISP work. In fact, if you look at what they do, they have basically a cost curve or a demand response curve that at different price points there'll be different levels of demand response. And if you tried to you jump through loops to try and understand how they got this, you say, okay, maybe they use these demand response curves. If they did use those, then they're effectively implying that the price must have been above $300 a megawatt most of the time. There's just no logic there behind how they've actually used AEMO's information to actually have these demand response. So that's I guess a bit of a technical point, but the fundamental thing is that in their scenario, in a scenario with no NEG, apparently price is going to be higher. Fair enough, but that goes against just the basic concepts of how demand response works. So in a scenario with higher prices, there's less demand response. Just from just pure logic, that makes zero sense whatsoever. But yeah, there's problems. Basically, they have assumed a lot of cost reductions. I think it's $27 billion over the next 20 years, or sorry, next 10 years, because of this policy. Now, this all comes down to how they're treating contracting, which is again very contested and very counterintuitive if you think about the issues around market power, particularly in light of some of the recommendations in the ACCC report. It's sort of, it just doesn't logically follow that we're going to do nothing to the power sector, and then the very generous gentailers are going to voluntarily give away about $27 billion over the next 10 years. It's just a completely artificial or a fabricated kind of approach. There's basically, this is why I talk about this missing money. There's magic pudding economics, or whatever you want to call it. There's essentially an implication within their modelling that there's a $27 billion wealth transfer from consumers to, from generators to consumers, which is a fairly heroic assumption, I would think, particularly if you've noticed in the last couple of days they've been putting out their, they've been doing their annual reporting, and I think AGL had over doubled its profits to $1 billion or something, and yeah, apparently they're going to give it all back, so that's great. But yeah, more fundamentally, I guess, is the role of this. Like I've had this argument with many people. It's just modelling; it doesn't mean anything. It's sort of like I take personal offence to that, but it is actually being used to prosecute the case that we need this pretty terrible policy. Like this is actually being, it's not like it's not benign. Like if it was crappy modelling that a lobby group did that, and then you can look at it, as part of a wider consultation process, that's, sure, you can make that argument, but we don't believe you. This is being used to make decisions by state governments, by even federal government, by other stakeholders and lobbyists and support groups to say, look, it's going to lower prices by $550 because this modelling says so. Now, I don't think anyone actually believes that, but they still make that argument, and they don't actually say, we don't believe the modelling, but we're going to make the argument. This is a sort of more of a social science or political, a political question around what the role of modelling is. But fundamentally, I have a very bad view of people that are basically using this as a justification for a bad policy. It's just bad process and just not how good decisions are made, from my perspective at least. I've forgotten what I was going to say. Okay, so now, we can have arguments about modelling forever, but this has just been a truly awful process from a governance and accountability perspective as well. So the Energy Security Board came out of the Finkel review, or supposedly did, and it was one of the recommendations to set up this body. And when they were first set up, they actually, before they were legislated, they started providing advice at the direction of the federal government. Now, they are not accountable to the federal government. They are actually a body of the COAG Energy Council. And I think with the first COAG Energy meeting, they explicitly changed their, I can't remember what they basically passed a resolution to make sure that everything that the COAG, that the ESB did, went through the COAG Energy Council. Now maybe that has happened, but it certainly doesn't look like that has happened. Now, for a body that is, supposed to represent Queensland and Victoria, it seems a fairly curious omission to not include the Victorian Renewable Energy Target, which is legislated, or the Queensland Renewable Energy Target, which is not legislated, but is still, a policy of the Queensland government in their assessment of their policy. In fact, based on the fairly dubious modelling we've got from Aysel Allen, we can actually see that the Victorian government will actually cost, if you took their numbers on face value, which I don't, it would actually cost the Victorian government a lot of money for this policy to be implemented. So there's sort of a fairly serious question around who is actually, who is, driving the ESB, or who is actually making the decisions around what they're doing and the modelling they're doing and the scenarios they're developing. Normally you would have a very broad consultation with very open. If you compare this to any other exercise that's been done in this space for the last I don't know, 10 plus years, you have, one that I like to think about is the Climate Change Authority's special report into the electricity sector. Now they had a explicit round of consultation around this. They wrote, the consultants who were Jacobs or SKM at the time maybe, they actually did a formal round of consultation, wrote a consultation report around the consultation process, all of the input they got from that. They wrote, I think, a 350-page modelling document. They put all their spreadsheets of inputs and outputs out. They had peer reviewed. And because this is the electricity sector, it's a fairly fundamental and important part of our economy. They actually had, I think it was Monash Uni, do a sort of economy-wide modelling from the outputs from this model into the economy-wide stuff. Now, if you contrast it to what we're seeing with the ESB stuff, I think we had a 20-page, or not even 20-page, it was maybe 14 or 15 pages in total in their ESB document and a couple of spreadsheets of inputs. And that's it. That's the entirety of what we've seen about this entire modelling process. There's no modelling document, there's no open and transparent exercise around developing the input assumptions. It's just been an absolutely fairly horrendous process around this modelling, and it makes it basically points to the fact that this modelling has only one purpose, and that is for political arguments, and it doesn't actually have any basis in what the policy does. More ugly, this came in yesterday. I find this particularly curious, given that the COAG Energy Council was supposed to sign off on this policy on Friday. So I'll talk about this one first because this is the easiest one. This was apparently introduced, or a proposal from the South Australian Energy Minister, and that's for the South Australian Energy Minister to be able to, not at the moment, so for this reliability obligation, I think I mentioned earlier on that the electricity statement of opportunities, which used to be a guidance, is now becoming a formal way of assessing whether we're going to meet the reliability of the system. So there's a whole heap of processes that sit behind that, so that at 3 years out, if there's a reliability gap, then this set of processes happens. If there's 1 year out and there's still a reliability process, then this happens, and there's all this accountability and people making decisions about, and reviews of whether or not this is working, etc., etc. South Australian Energy Minister wants to be able to just trigger this process, and this is a recipe for disaster that, well, we know from experience because we've seen this in Queensland and New South Wales following blackouts, or about, what would that be, 13 or 14 years ago. Basically, the energy ministers of the day increased the reliability standard in the poles and wires. That partly contributed to the significant overbuild we saw in the poles and wires and the costs that have come through in that. And this, in my mind, is like, this is how you do this to the generation sector too. You have the minister or the jurisdiction, the minister of the day being able to say, shit, we might have a blackout this summer. Let's trigger this. Even if they'll have a very different risk trade-off than say a consumer, or even the market operator, or some kind of regulatory body. This one's a little bit more complex, the top one, but equally important in my mind, at least. It's the idea of having this trigger point 5 years out. Now, 5 years out is a long way for AEMO to be forecasting. I think they're going to have enough trouble forecasting 3 years out without any accuracy, particularly around this reliability stuff. To ask them to forecast 5 years out and use that as a regulatory instrument to decide whether or not more capacity should be built is also a recipe for overbuilding and gold plating the generation sector. Another intervention that sort of came in overnight, which I think is also hilarious, is the federal government's going to introduce price controls in the retail electricity space. Now, this is really funny because they keep, apparently I've seen this written a few times, or quotes saying, we're going to do what we did to the gas market to the electricity market. You know, we intervened into the gas, we put in this. The interesting thing from my perspective is that the federal government has absolutely no jurisdiction over domestic electricity policy. Constitutionally, that's with the states. What the federal government does have jurisdiction over is import and export, international imports and exports. That's how they were able to intervene with the gas market. They could basically have this domestic gas trigger, I've forgotten what it's called, the Australian Domestic Gas Security Mechanism, that they could trigger to affect the import and export of gas. So I'm just really looking forward to seeing how the federal government is going to lower prices by regulating the import and export of electricity. That's going to be very curious to see, or, you know, I honestly have no idea how they can actually implement a price control on retail electricity prices. That's nothing. That's to say nothing about the fact that it's the most obscure thing for a supposedly neoliberal sort of, or neoliberal facing, or a government that has probably spent the better part of the last 30 years unwinding price controls in the electricity sector, now saying we need them back is just utterly bizarre. Okay, so I guess, just as I don't really have a particular one-liner conclusion, other than to say that maybe the energy-only market is, you know, I'm not for or against it. I don't think it's necessarily better than a capacity market, or its capacity market is necessarily worse, or vice versa. But I think we also have to realise that it might not actually be doing what it says on the box, or at least the political realities of having a functional electricity energy-only market may actually mean that it's not practical. In theory, yes, we have these nice high prices that incentivise capacity to be built, but that doesn't take into account, you know, the fact that the price goes to $10,000. It's on the front page of the Australian the next day, or, you know, the fact that if there's, you know, Josh Frydenberg's got a habit of saying that there's a 43% chance of blackouts in Victoria next year, which, you know, technically they got that from the NCNDP, I think, last year. Technically it's an accurate statement, but it's being completely misconstrued and basically helps undermine the functional, or the functioning of some of these institutions and structures we have in place to actually have a market that delivers the service we want. So yes, we have you know, all this capacity that's coming in from government, whether it's Snowy 2.0, whether or not that actually happens or not is another question. There's the VRET, there's the batteries, there's all these sort of interventions, and it's sort of from my perspective, it's sort of like the energy-only market has not been allowed to work, and maybe it can't be allowed to work. And it's not to say, we can't actually see the bottom of my slide there, but basically it's not to say that it's good or bad, energy-only markets are good or bad, but we need to be at least consciously aware of what is actually happening and whether or not they're actually working or can work in this particular political environment. I guess the other question that I'm sort of thinking about as well is, has it ever worked? You know, we've had a liberalised electricity market for 20 years. If you go back and look through all the capacity that's been built, there's been a few open cycle gas turbines, but I'm pretty sure maybe one combined cycle gas turbine as well. We've had Cogan Creek, underwritten by or built by Queensland Government. Everything else has been basically built by the Renewable Energy Target. There's a legitimate question to ask about, actually it's been very good at efficiently dispatching the resources we have, but has it actually delivered on building new capacity? I think that's a reasonable question to ask. Anyway, that's all I wanted to say.
Great. Okay, I think we've got time for a few questions, if there are any. Richard.
Dylan, thank you very much. Very interesting and provocative. Thank you.
Yeah, I should stress, I don't necessarily know if I agree with everything I said, but yeah, it's certainly stuff that's been rattling around in the head for the last couple of weeks.
I'm not speaking up to argue, but am I right in thinking that the government is now proposing to satisfy a Paris Agreement requirement of 26% reduction by saying electricity will improve itself by 26%, and we'll think about everybody else later. And the Labor Party is effectively doing the same thing, but saying 45% for electricity, and we'll think about everything else later.
Yep, so I'd say two things. This is a very nuanced point. Paris Agreement is for 2 degrees of climate change or below. Our NDC is for 26%. They're very different things. So yes, our NDC is for 26%, and based on 2005 levels, emissions levels. So it's actually only 2% based on where we are now. I think it works out 0.2% per year until 2030. So that's what the 26. So it's not really 26%. It's very little. It's practically nothing. And yes, as of yesterday, we have confirmation from Labor that they are taking the same approach, which is a big, I think, a significant shift for them, because previously their position was the Climate Change Authority's perspective, which was, they actually did model the 2 degree scenario, not the 26% scenario. They modelled the 2 degree scenario and said that Australia's emissions, they used a carbon budget approach and had various different equity regimes and so on, but they basically came up with the number that all of Australia's emissions should be 45% below, 45% less than the 2005 levels by 2030. And that was the position that Labor had adopted until yesterday, when they basically confirmed that they were only going to apply that to the electricity sector. So then the same arguments can be made that have been made to the Labor Party. Okay, so what are you going to do to agriculture? What are you going to do for transport, et cetera, et cetera? So it is, I think that announcement is actually a fairly significant step backwards in terms of what we need to do. Yeah.
Other questions? Any other questions? Over here.
So I was interested to see you commented that they've rolled back the modelling window from 3 years to 5 years, and
they're thinking about it.
Okay, I guess there's something I'm missing here, because if you're planning to build infrastructure, 3 years isn't much time, and I would have thought your planning is much further ahead. So what is it that I'm missing? Because evidently you want to plan further into the future than 5 years.
Yeah, so I guess this might be perhaps where it's coming from a little bit, but there's a difference between, so individual companies might choose to do that. This is the backstop. This trigger point, this 3-year trigger point, only comes into effect if they haven't done that. So this is sort of like, and if you listen to the ESB, they say this mechanism won't actually come into effect for 10 years. It's there, or there's not going to be a reliability problem. We don't need to build anything, but in the event that for some unforeseen reason, they'll still do this. This 10-year. They'll still do the 10-year outlook and say, in 2024, 2026, there's going to be a requirement for 200 megawatts of new open cycle gas generation in Queensland. Now, a private company might actually go in and start doing their planning work much before that 3-year trigger point. That 3-year trigger point is just there in the event that nothing happens. Companies will. The idea is that companies will actually respond to what they've done for the last ever. They've put out this ESO for at least 10 years, I think. So that process still remains. It's a 10-year planning horizon. But if nothing has happened and you're 3 years out, then you do the trigger. And the problem with going to 5 years is that's, or from my perspective, that's too long a time in advance to pull the trigger. Yeah.
Okay, so it won't do anything for 10 years, but if the states don't pass it, Victoria blacks out next summer.
Yes.
apparently.
Oh, this
So-
is just on this. This is I think this is an important thing to keep in mind because this is actually a bit of a radical change, or it's a change at least in how we think about reliability in Australia. We've forever talked about unserved energy and the reliability standard, and just in the last 12 months, I think. AEMO started talking about the loss of load probability, which is a fairly common metric overseas, but it hasn't been used as much in Australia until recently. So, yes, in the NTNDP, or no, what was it? Whatever the report was last year, it said there's a 43%. It was the ESU last year. They said there's a 43% loss of load probability for Victoria. What they don't say with that is how much load and for how long, and that's very critical because, and that there's a loss of load probability now. It's just that we're actually still well below the reliability standard. And I think, for this summer there's a loss of load probability of Victoria that's like, there's a 20% chance of loss of load probability. It means nothing. Our reliability standard is 99.9999, or the expected unserved energy is 0.00001, which is twice as good as the reliability standard. So there's a bit of a change here in terms of how we think about reliability. That it has to be, I think, there has to be a degree of education that goes on around this because all of the, reporters and political reporters and various stakeholders, they hear this. There's a 43% chance of blackouts next summer in Victoria. They don't know that it's a 43% chance of 10 megawatts for half an hour. It's a 43% chance of a system black as far as the public understands it.
Okay, well look, thank you all very much. Please join me again in thanking Dylan.